What's up? If you know what I'm about to talk about, congratulations, you're not an idiot. If you don't, you're an idiot. No, I'm just kidding. But again, this is a concept that there's not much information about it out there, mainly because most people just think there's a magic algo that runs the fucking markets, which is not the case. And they don't care to look further into more information. But I'm here to provide you with my understanding and my experience with this information, right? This is mainly, again, the Greeks from options and how they affect futures. We have gamma, we have vanna, we have delta. Right now, we're just going to talk about gamma exposure and how it affects the markets. Now, don't mind the background if you want, just focus on the jersey. But there's positive and there's negative gamma exposure, right? Amelia, what the fuck is gamma exposure? Positive, negative? Like, dude, this is not Hulk. Well, what positive gamma exposure means is that dealers, market makers, right, the guys that fill your orders, the guys that make sure you hit stop loss, they hedge one to one, meaning that when you buy, right, in options, when you buy an option, they sell the underlying asset, which would be NQ1, right? If you buy NDX, if you buy SPX, they would sell ES. And essentially, again, when you buy, they buy the option and they sell it to hedge. Again, they don't care if price goes up, price goes down. They do not make money from direction. As many people think, like, oh, the dealers, they want to put price higher to hunt my stops. Yeah, they do not make money from direction. They do not care. They're non-directional. What do they care about? They care about filling orders and hedging gamma exposure. Now, their gamma exposure is essentially how much they're at risk at, right? If price goes up, if price goes down, not because of the direction, but because of how they're hedging. And again, I'm going to make a whole nother video on how gamma exposure actually works, right? When they're long exposure, long gamma, when they're short gamma. But essentially what you need to understand is in positive conditions, whenever price goes up, these guys will sell, right? To cover themselves. And a negative exposure, whenever price goes up, they will buy. And whenever price goes down, they will sell. Again, this is the basics of what you need to understand. We have way more advanced videos, but that's not what this is for, right? This is what you care about. Now, how do you see if dealers are playing in or if there's heavy hedging? Well, there's, again, you can just look at iceberg orders. If you see that there's certain levels or certain dips that are, okay, let's say price is going down, you see a lot of icebergs coming in, or you see the time in sales is getting like 80, 70, 50. More likely than not, these are just market makers and dealers hedging against the current move, so you can expect a reversal or whatnot. But let's be honest, how the flying fuck does this affect my trading? This is probably what you're thinking, and honestly, I don't blame you, right? But let me ask you this. Have you ever gone long with momentum only for price to reverse as soon as you get in and you're like, what just happened? Price was going up so much. Or do you ever see some people like me get entries near the higher and low of day and wonder how did he do that, right? Again, mostly I like to trade range breakouts with gamma levels, but sometimes if we have a really good setup under the proper market conditions, I'll get top tick, bottom tick. We do it. But again, realistically, again, most people just trade, okay, price action. You need to understand the context of the price action, the context of the markets. The context of the markets does not mean do we have a red fucking folder on Forex Factory. There's a lot more to it, which is what we're about to go into. Now, when you pair the right levels under the right environment, you get quality trades. Why? 40 to 60% of the volume in futures, and again, don't listen to me, go do your own research, go to the CME, go look at MentorQ, go look at other studies published by actual firms. 40 to 60% of the NQ volume as of the past couple of years has come from options hedgers and dealers. Why? Because with the rise of 0 day to expiration options, dealers need to hedge a lot. And the more volume that comes in options, the more volume that is hedged in futures. Therefore, we get levels that come from these dealers, right? They're 1 day max, they're 1 day minimum. The call resistance, the call wall, the put support, the put wall, the gamma wall, the gamma exposure levels, right? So these levels, the reason why I like them so much and they're so important is because they actually represent proper data and they actually have the momentum, right? Not all the levels work. That's why you want to find liquidity. That's why you want to use them in the right environment. But it's giving traders an edge that never existed before. And I say never existed before because, again, before 0DT options were so popular, hedging and it wasn't so aggressive in futures. Now it is. But let's get into an example, right? This was today. We cooked. But what I want you to focus on is today we have positive gamma environment, right? That means that buy moves get sold into, sell moves get bought into, right? Bam, bam, bam. But again, over here, we do not care about these moves in terms of, this area right here. Let me make this yellow because you guys are not going to be able to see that. It was all yellow. Again, this, we don't care, right? Again, yes, sure, we have a GEX level, but it did not have any liquidity here. So we do not care, right? So let me delete this. Now, here's what happens. We get to the 1 day max. And in the 1 day max, we had 85 resting orders here. What happens? Price goes up into the 1 day max, the orders get triggered, and then in the volume, right down here, or you can see the time and sales, we saw a lot of sales come in here, right? This shows us that, hey, sellers are stepping in here. What does this tell us? We are in a positive gamma environment and price just went up, right? That means that as price went up, sellers were stepping in here, 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 here. And then here we saw a major move of sellers. And then the 1 day max, right? Again, it doesn't always hold. From what I've seen, it holds or gives us at least a decent trade, maybe 60-70% of the time. But we know that we can expect a short move from here, and we can maybe assume, again, not predict, but if we see it reject, we can assume that this might be the high of day. So what do? We wait for the reaction. Boom, there's your wick. And then we can target more liquidity and more gamma levels, because we know that the next place where the dealers are going to be able, they're going to be looking to hedge more orders, to be more aggressive, and there's going to be more liquidity to fill, is going to be at the next GEX level with liquidity, or at the next liquidity level. At least that's my understanding of it, and it's how it works for me, right? Don't come at me in the comments. So we target this area, and bada bing, right? We understand that, again, this might get bought into. That's why it gets choppy. We have a very positive environment, so this gets bought into, gets sold. Gets bought, gets sold, right? But you get the gist of it. And again, look at where it consolidates, the same GEX level. So that's just one way to use them, right? Again, just pair your level, pair your liquidity, and if the reaction matches the environment, right? Again, price goes up into a bearish level, right? Price goes up into a bearish level and it rejects. Then you know that you should at least continue going down into your next target. This looks like the X-Men logo. It is not copyrighted. Entonces, next thing, right? The gamma wall. Why do I love the gamma wall so much? Because it gives us some crazy quality trades, right? Again, whenever price approaches a gamma wall, we can see there are two things, right? Either it's going to consolidate and go down and then come back up and consolidate, go up, or that looks like a head and shoulders. Oh my God, Alex G was right. Pero. Or the other thing we can see is price is going to go to the gamma wall. It's going to get far away. It's going to come back. It's going to get far away, right? Again, the gamma wall is like a magnet. It pulls you in, then it takes you back, or kind of like that toxic X, which nobody likes to admit. Pulls you in, then leads you back out. But no es cierto, nada. Essentially, again, so we saw that price came into the gamma wall, and we had a lot of orders here. And as soon as price came in here, we had a bullish high volume event, right? We had like 180 icebergs. And again, iceberg orders, it's just somebody hiding their size, right? The iceberg might show 7, but there might be some fucking degenerate with like 200 orders going in there. So if we see 180 total icebergs, you know that there's some big activity hiding some size there. Therefore, this could have been a good buy. Oh my God, IFEG. No, that's not how this works. Oh, the fair value gap, it did not get filled. What happened? This happened. So again, and you can just take the trade into some liquidity. And again, we understand that we just come from a sell move in positive gamma exposure, right? That means that they're buying here, they're buying here, they're buying here, they're buying here, and boom, here come the big fucking buyers at the gamma wall. So then we know that we can target some more liquidity, right? Oh, we had liquidity around this area. Boom, you have a trade here. Guess what? We're at the gamma wall. We just went above. And what did I just tell you? Up moves get sold into, right? And down moves get bought into. Okay, so if you miss this trade, maybe you're just that bad and you miss this trade. Well, guess what, my brother? You come here, you wait for the liquidity. Oh, we had a lot of sellers here. They took price. Boom, candle comes down. This confirms that we had sellers. I honestly did not see what happened here. Let's assume that we had some sellers, right? Let's assume we had some aggressive selling pressure here, which we can see by the rejections at a level that had liquidity. Then we can just target the gamma wall once again, right? So you can place your stops right above here. If you want to be very conservative, you can put them right above here and just target this motherfucker once again. It can be that easy, right? But if you want to get access to more gamma tools, options tools, and all that, Mentor Q, that's where I get my data. The link is below. And again, if you just want a free training on bulk map on gamma levels, click the link below. And if you also want to work with me, click the link below. And if you think Barca is the best team, just comment. If you think it's Madrid, please unsubscribe. But see you guys. And again, any questions you have, let me know in the comments, and I got you.